All right, we got results from big, medium, and small banks this morning. It was a bit of a mixed bag for the stocks that are moving higher. And joining us now to break it all down is Yahoo Finance's David Hollerith. David, what are you noticing?
Hey, Jared. I think Bank of America, the second largest bank, sort of stands out first. What we saw from them is that global markets and investment banking, those two businesses sort of stole the show. They came in better than expected. And the bank's core revenue stream, net interest income, also rose 14% year over year. And though that came in slightly worse than expected, Bank of America still gave a rosier outlook for net interest income on the earnings call, looking towards the second half of this year. They said they expect to still be up 8%. For the full year. So, going into this bank earnings season, I think a lot of analysts have sort of been saying there's been so many revisions. Sort of the conversation has been around, the people who, or the banks who do not revise their expectations are probably going to be the ones that look like, winners of this season, which is sort of interesting. And it kind of gives you an idea of where we are now. Morgan Stanley's profits fell 12% from a year ago through the second quarter. And it turned out to be less bad than expected. And trading and investment banking both came in much lower, but slightly better than expected. And it also has a significantly larger wealth management business, which helps cushion its revenues a lot. This is kind of notable for Goldman Sachs, which is reporting earnings tomorrow, and they rely even more heavily on investment banking and trading, given that they have a smaller wealth management business. Charles Schwab also came in with earnings that did not look great, honestly. Their profits were down in net income, which fell 28%. Deposits were also down, falling 31%. That's both from a year ago. But importantly, Charles Schwab has had issues in the first quarter related to its cash sorting, which was basically that depositors of the bank were moving to higher yielding accounts. And what they've seen in the last month or so has been that trend has been decelerating. And given that that's the main thing that investors have been paying attention to, that seems to be how the stock is responding. Back to Bank of America, I will just point out that even though they had incredible results, they are a good read through for the smaller banks. They increased deposit costs by $1.4 billion from the previous quarter. And that's notable as we're going to see results from smaller banks. Western Alliance is reporting this afternoon. And that's where we'll see sort of the theme of what we've been paying attention to in earnings, which is the rising deposit costs. We'll see how the smaller regionals will respond to that. And so we'll be paying attention for signs there. Obviously, Western Alliance faced some of the most scrutiny of any regional bank during the first quarter.
Yes, we're going to be talking about those rising deposit costs in just a second here. Thank you for those excellent points there, David Hollerith.